Hey, this is attorney Elizabeth Potts Weinstein, and today we're going to be talking about where to bank, where to open up a bank account for your small business, especially in light of the recent bank failures here in the United States, like Silicon Valley Bank. So if you have had a business for a while, all the stuff that's been going on in banking may make you rethink where you have a bank account and should you be doing anything to protect yourself against these bank failures. And if you have a brand new business, you're thinking, where should I open up a bank account for my new business in light of all this stuff going on? So what we're going to do today is talk about what are the different options for you in opening up a bank account, what kinds of considerations you should have in opening up a bank account. We're going to look at some specific options that are out there as of the time I'm recording this. You can kind of see what you need to think about and how to evaluate the different options that are out there. And then we're going to talk about what everyone needs to be doing, and even what I actually have done this week to mitigate against the risk of your bank where you have your business's money going under, and what you should do to kind of hedge against those risks so it doesn't make your business go under too. So here in the United States, you can kind of think about banking for small businesses in 4 different categories. The first category are the big 4 banks: Bank of America, Chase, Citibank, Wells Fargo. Those are the 4 largest banks to open up business checking accounts in the United States, and they're all going to have fairly similar things at them. I personally am not in favor of Wells Fargo. I think they have a very bad reputation. That's just me. I have my accounts at Bank of America, but I also have a banking relationship with Citibank and Chase. So we're going to talk a little bit about the idea of banking relationship and why you need to think about that. But those big banks are one of your options. They're all going to be fairly similar. They also have a lot of regulations to keep them from going under so they don't take too much risks. And all those regulations happened after 2008 with the bank failures there, including Washington Mutual, where I used to have an account with them back in the day. I didn't lose any of my money. It was okay. The second option are regional banks. So Silicon Valley Bank, one of the banks that went under in this last week, was a regional bank. Regional banks are smaller than big banks, but they're not necessarily small. Now, some regional banks are more community banks where there might be just 1 or 2 branches of that bank. They're very small, comparatively speaking. Community banks tend to be about a community. Sometimes it's a certain ethnicity, sometimes a certain language, a certain area, something much more specific. And then there's regional banks that a lot of times what happens is they started out as a community bank and they either got just big just because they got so many people involved, or they gobbled up a whole bunch of community banks and created this regional bank in the interest of efficiency. Now, it is definitely true that one of the banks that failed, actually the 2 banks that failed in the last few days were both regional banks. Now, the thing is that regional banks have a little bit less regulation than the big banks, which is probably one of the reasons that led to their failure. Not the only reason, which we'll talk about a little bit. I'm going to go through why this actually happened. But regional banks aren't necessarily bad. Sometimes they have much better fees structure. You can have relationships with them, especially the really small community banks. It can be very good for if you're a recent immigrant and you have a bank that is where people speak the same language as you, and there's a lot of people there who also came to the same country. Regional banks can make a lot of sense, and community banks for a lot of people. The third option we have today are online banks. So one of the online banks that I'm going to be showing you is a bank called Mercury. That's actually not a bank. It is a company called Mercury that works with a whole bunch of banks. And we're going to talk about how it's different and the pluses and minuses of that. But there are different kind of online only banking solutions that are available to you where there's no physical bank. And because of that, there's no physical branch for you to go in. They save a lot of money, so they can pass that savings on to you. But it does mean that you can never go there in person and get your money out, which you might be worrying for you. The fourth option are credit unions. Credit unions are not banks. Credit unions, you can kind of think of it's a nonprofit, and it's kind of like a co-op for banking. It's where all the people who have their money there are all members of this bank, and they all kind of own it together in a way. And so because of that, the fees are almost always going to be lower. There's not going to be as many features available for you. And so for some of you, it would totally not work. A lot of credit unions do not have business banking or the kind of business banking that you may need. So you have to look for a credit union that actually has business banking of the kind that you need. But now with online banking, it might not matter the fact that there's not a lot of as many branches. And it may work for you both from the perspective of saving a lot of money, as well as being involved with a nonprofit instead of a giant corporation. So let's go through the things you need to think about, because before you decide what bank you're going to use, you need to think about your business and what you need, whether what you're going to need in the future, what you're going to need right now, the kind of business you have, because different banks are going to be set up, or credit unions are going to be set up for different kinds of businesses, and what kind of account do you need. So let's talk about the factors that you need to think about. First is, are you based in the United States? Are you physically here in the United States? If you're not physically here in the United States, it very much limits what kind of bank you can use, because the big banks, Bank of America, for example, you have to go there in person to prove your identity. This is a big sticking point for a lot of people setting up businesses in the United States when they are physically not here. Even if they're a US citizen, they're physically not here and they can't do the proving up of the identity thing. There are options, and we're going to talk about them in a bit. The second thing is the volume of transactions. Are you going to have 10 or 20 deposits in a month? Are you going to have 10,000 deposits in a month, right? Like these are radically different kinds of accounts you're going to have, because banks, every time you make deposits, I know it's all online, but that adds to the expense of managing your account because more things can go wrong, etc. So different kind of accounts are available for different volume of transactions. What types of transactions are these? Are you doing business in cash, where you need to go into a branch and deposit cash, and you need to go in person and deposit cash? Are you getting people writing checks to you and you need to deposit checks, right? Now, another thing for your business is, are you a sole proprietorship, or do you need an account for an LLC or a corporation? There are places where their sole proprietorship offerings are very good, but once you get to the corporation or LLC accounts, they're too expensive. What kind of business do you like to do with your bank? Do you want to be able to go in a branch in person and actually talk to a human person? Are you fine doing things by the phone and online? How do you like to do business with people? And it really just depends on your comfort level, and do you want to go there in person? What kind of features do you need besides just the regular banking part? Do you need a merchant account? Do you need payroll processing? You can use someone else for those, and I actually think that you should, by the way, but there are some banks that provide all of that. Are you going to need a loan? Do you need an SBA loan or some other kind of loan? Do you need large lines of credit? Some law firms, for example, personal injury, the clients don't pay up front. The lawyers get paid a percentage of what the client wins in the lawsuit. And so the lawyer has to have a huge line of credit at the bank so they can pay for all the stuff for the lawsuit, because they're not going to get the money at the end. And so some businesses, you may need a big line of credit because you have to do all this stuff without getting paid, and then your client or customer pays you at the end. You may also need a big loan or line of credit to buy inventory, to set up to build out your space, etc. So let's go into the options that are available from an example bank in each of these 4 different categories, so you can see the differences of what is available. So the first we're going to look at is Bank of America. That I actually bank there for my business. The reason I bank there for my business is because I've had accounts at Bank of America for decades, and so I just did that. I went with the same place. They have branches. At the time when I opened up my first business bank account, I had to deposit checks from clients. So I wanted somewhere I could deposit checks from clients, because at that time, it was a very long time ago, you couldn't do that using a phone app. You now can in most places, if not everywhere. So let's look at the kind of accounts that they have. So if I click on checking, what are the business checking accounts that they have? What are their different solutions? They're always going to have multiple options, or at least I think always have multiple options. So here are the 2 that they offer. Business Advantage Fundamentals, Business Advantage Relationship. They're going to have different monthly fees, $16 or $0, $29.95 or $0. So if you can see, if you have a really teeny tiny business and you're just starting out, you just have a few bucks, these fees could really eat into things. Now, you can avoid these monthly fees by having a lot of money in the account. So for the Business Advantage Fundamentals banking account, you need $5,000 in the account. You need to spend at least $250 on new net qualified debit card purchases, or be a preferred reward, which I'll talk about a little bit. For the other account that's cost a little bit more, you have to have 15,000. So why would you have one of these accounts over the other? So for this basic account, you get a bunch of different things. QuickBooks integration, so you can, if you have QuickBooks, it'll like send stuff directly to QuickBooks so you don't have to type things in. You use Zelle, and I actually have had clients pay me with Zelle, so that can be very useful. You can have multiple people access your account. So when I used to have a outside bookkeeper, they had access to my bank account so they could pull things in, and I give them limited access, so they couldn't like do stuff except for pulling in data. It was very helpful. Then for this account, you get no fees for incoming wires, stop payments, electronic deposits, and more. So if you have a lot of people wiring you, this is gonna be a big deal for you. So this is what I mean is you really need to think about what kind of business you're gonna be doing, what kind of transactions you're gonna be doing, and what features that you need. So you can see teller transactions and checks written with no fee. The fundamental is 200 transactions per month, 500 transactions per month. So very different depending upon how many transactions you need. So for example, when I was still getting new clients, how it worked for the number of transactions is I occasionally had people still writing me a check and things like that. So I'd have that transaction. Then I had people who paid for my services either by PayPal or on Stripe using a credit card. So Stripe does a daily sweep. So if 3 people bought from me using their credit card in one day, there was only one transaction in my bank account. Now on PayPal, the money goes into PayPal, and then I just do I decide when I'm moving the money into my bank account, which I might do once a week or once a month, depending on how much it is, or I might do it every day. Then it's totally up to me. So it really depends on your business, whether 200 transactions is going to be enough and how people are paying you and what your expenses are going out. There's all kinds of other stuff that they have. One of the things about Bank of America is this is a huge bank that has branches everywhere, and this is going to be the same for Chase and Citibank and Wells Fargo. They have branches everywhere. You can go there in person. However, they're a giant corporate behemoth, and they have these rules, and there's no like wiggle room around those rules. There's no person who can overrule those rules. That's just how the rules are. And if that's fine for you, then that may work. And if not, then it's not going to work. So you want to think about that with the big banks. Now, on the other hand, the big banks are very, very big. They have a lot of regulation. I'm not going to say that they'll never fail because anything could fail. But if they failed it, and it's because the United States has failed, because the United States would definitely bail them out. I mean, I think that's what would happen. However, we're counting on the United States not failing, which, you know what, if the United States fails, we all got bigger problems. So I'm not even going to worry about that part. I'm not super worried about one of the 4 big banks failing at this point because they have so many regulations. They have to keep so much cash on hand. However, I'm going to knock on wood about that. All right, next we're going to look at regional banks. So the one I pulled up was Bank of the West because they're here in the Silicon Valley. I think they were actually founded in Los Gatos in Silicon Valley. Now they actually recently got bought by BMO. So all these regional banks, which are smaller, get bought all the time. So it's kind of hard to even find somewhere that is small and is going to stay small, but it's somewhere to start. Okay, so Bank of the West Business Checking. They're one of the most sustainable banks. What does that actually mean? They were named the most sustainable bank in North America. So if that's important to you, bank with no minimum balance. Let's look at this Business Checking with no minimum balance. Okay, so what is the different options? Okay, compare business accounts. So they have these 3 different accounts. So the first one has no minimum balance. Monthly service charge is $10 or $0. Then they have a classic, $25 or $0, and then they have their choice. You see the different max coin and currency deposited or furnished per month. So this is going to be something for those of you who do business with cash. And you obviously know who you are. If you do business with cash, this could be an issue for certain kind of businesses because if you do everything by cash, even this biggest account is only $20,000 per month of getting deposit or furnished out. So you may need a different kind of account. Transactions included, 50, 150, 500. 50 may or may not be enough, but for a really teeny little sole proprietorship business that just started yesterday, maybe it is. Everybody gets a debit card. Then at the highest one, you get 10 wires at no cost. You don't have to pay an extra to get a paper statement, but I don't think you really need a paper statement. Opening deposit, $100. That's very common. So how do you not have the service charge? So for the little account, all you have to do is make a deposit. Aw, that's very simple. You can make a deposit. Does the deposit to be any amount? Make one deposit of any amount. It has to be at least 1 cent. That's lovely. That's a really nice thing. If you're starting a brand new business, it does not have a lot of fancy things to it, but you may not need a lot of fancy things. So this may be a very good option. So all you gotta do is make one deposit a month and then you don't have to pay that $10 fee. As long as you don't need more than $2,500 in cash in or out of the account in a month and you don't have more than 50 transactions, then that may work for a lot of people. I'm gonna look at the account details to see. You can use the Zelle thing, which I actually have had clients pay me with. They have a whole sustainability thing. And what the requirements are does depend on your state. Every state's gonna be different. Yeah, so that looks like a very nice account for people who are starting a brand new business who don't have a lot of money yet. All right, the next one we're gonna look at is online banking, and this is Mercury. So this is the thing I recommend for those of you who are not in the United States, because Mercury is set up, there's a number of things that are interesting about Mercury, but one of them is that it is set up where you do not have to be a US citizen and you don't have to be physically located in the United States. I actually opened up a bank account for my law firm this week at Mercury. And one of the reasons I did that was just to have another bank account, because my only business banking account, my only business checking account, I have other accounts, but business checking account was at Bank of America. And here's the thing, if something happened to that account, it could be anything. It could be a Bank of America problem, it could be just the account gets like some fraud thing or whatever. I have no other bank account. I can't like run payroll. I can't do anything. The idea is to have something else. Now, right now it just has $100 in it because I just created it in the last 24 hours, but I will eventually put more money into it. So if something happens to my main account, I have this other account over here and I can use that to fund payroll, pay the bills, etc. until I get the other thing fixed. It could be a great idea. And we're gonna talk a little bit more about that. But so how this works is Mercury is not a bank. What they do is they're kind of the logistics of this, and they take your money and then they put it in a bunch of other banks. And so because of that you get more FDIC insurance, which I'm going to talk about a little bit at the end when I talk about what the problems were with the banks failing. But you get more FDIC insurance and more money is covered, which only matters for those of you who have more than $250,000 in your account. I don't have that more than $250,000 in my business checking account, so it doesn't actually matter to me from that perspective. However, for some of you, it might. And it's spreading out the risk among multiple banks. So that is an interesting option. Now, I don't know if anything like this has ever failed or gone bankrupt, and then what happens if it does. Your money that was at those banks should be fine. However, if there was money in transit, what would happen? I don't know. But if you want to open up a bank account and you're outside the United States, this is one of the few places that can actually handle that. So what happens is if you want to open up an account, so when I wanted to open up an account, I actually just did it completely online. And it takes you through a process where you enter up your email and then you open up the account and then you give them all your information. I took a picture of my ID. I took a picture of myself. That's how they did the ID confirmation. I think it's a little bit easier for me because I am a US citizen, so I could put in my social security number and things like that. But even if they are ready to create these accounts for people, even if they're outside the United States, as long as the business is formed in the United States. You also give them your business documentation, of course, too. So let's look at how it works and what the different accounts are. So here are the financial institutions they work with. These are large banks. Obviously, like Wells Fargo is one of the big four that I talked about. A lot of these other banks are very large too. Evolve, Capital One, Vanguard, of course, Morgan Stanley. These are banks that are legitimate to have your money be swept into. One of the nice things about using a service like this is the fees are very low. So let me see if I can find. So let's give an example. They have an example for e-commerce. So here's an example for e-commerce where they go into how it works. You can apply in 10 minutes or less. Yeah, it really did not take me very long to do. 0 monthly fees and no minimum. So like my account has $100 in it and there's not going to be any monthly fee. I already got my virtual debit card and then they're going to send one in the mail and you get free wires. It's a lot of really great features. And as I said, you don't have to go in person. Let's see if there's other things. They also have, when you have more money there, they have more options for earning interest and stuff. I'm not really worried about it because I put $100 there. I don't expect to get interest on that, but they do have more options for treasurers and things like that where you can get interest on the money if you're putting in a significant amount of money. So for those of you who are not in the United States, or if you want a second account somewhere, this is one of those options. The last thing we're going to talk about in different options of banking is a credit union. The largest credit union, I think, in the United States is Navy Federal Credit Union. You have to be in the military or a veteran or like married to someone in the military, family member in the military, to be able to use them. So obviously it does not apply to everyone, but for some of you, this is an option. So their business checking account, no monthly service fee. This is really great for new businesses. They have a very basic business checking account that has 30 non-electronic transactions included. So they're not charging you for the electronic transactions. Then they have a higher level Business Plus that has a monthly service fee, but you get more service for that and more transactions. And then of course, premium checking that has more things in it and actually pays you interest. Still a tiny amount of interest, but they also have business savings accounts. One of the things to understand about a credit union is you have to be a member of the credit union, which means you have to qualify, however they do membership. And then you go in to get that account at the credit union for your business. So for some people, these kind of things will be very helpful. I'm not sure what all the features you get of these accounts. You would need to see what they are, because I can't tell, do you get wires for free? Well, here's a schedule of fees and charges. Wires, yeah, so incoming wires are no charge. Outgoing wires are domestic $14, international $25. That's not unreasonable for wire fees, but some places don't charge for anything for wire fees. So it all depends if you need that kind of stuff. So how do you pick one of these? How do you manage the risk for the ones you've already picked? And what is the risk? Like, what actually happened with those banks that failed? Well, so why did these banks fail is a fairly complicated thing, but it came down to a simple problem at the end. There were a number of things that went into it. Part is that they're not as regulated, which means that they didn't have to have as much money just sitting in cash. I don't mean literally paper cash, but I meant cash on their books that they could hand out to people. Part of it is that as interest rates were really, really low before, but they've been going up and are much higher now, the assets that they had at the bank weren't worth as much. So that created another problem. And then there was a run on the bank. So what is that? What actually is a run on the bank? You may remember this from movies and things that this has happened, is when you put money into your checking account or savings account at the bank, they don't like just keep that money in a vault. Okay, they take that money and they go do stuff with it. They have a mortgage to somebody. They have a loan to somebody. They buy bonds. They do all kinds of things with that money. They're supposed to be very fiscally responsible with that money. Then they have to keep a certain amount just in cash. Some of it is literally in cash, and then some of it is cash on the books where it's not out invested, but not all of it. So here's what can actually happen is that people start to panic and they have a run on the bank where because it used to be people used to actually run to the bank and get into a big line. This is what happened in 1929 when so many banks failed in the United States before FDIC insurance wasn't existing yet. And people would go and say, I want my money. I want this $100,000. I want this $1,000. I want my life savings, whatever. I want it now in cash. Nowadays you get a cashier's check, but in cash. The bank can pay the first person and the second person and the third person, but then at a certain point they run out of money because they can't call on all those loans and things like that, where the money that they gave out to somebody else, because it's not due yet. So they can't get access to that. And so because of that, then the bank fails. Now, in olden times, 100 years ago, the bank literally failed. Like that money was just gone and you were out of luck. That is not true today. And I don't remember what year it was, like 1932, 1933. The FDIC, the Federal Deposit Insurance Corporation, which is not a corporation in the sense of a company, it's an agency of the United States federal government, insures all bank accounts in the United States that are FDIC insured bank accounts up to, as of right now, the amount is $250,000. That's per owner at that bank. So if I have two checking accounts at the same bank, I only get one $250,000 insurance. Or if a company has two of them, same kind of thing. So what happens is that if the bank fails, the FDIC guarantees that you will get up to $250,000 of your money. But if the bank doesn't come in if the FDIC doesn't come in and say you get all of it, then you're just out the rest. Now, what happened in the specific situation of Silicon Valley Bank is that a week ago, a week ago, a bunch of venture capitalists started getting worried about the bank. Because Silicon Valley Bank wasn't kind of a regular bank where there's all kinds of people with all kinds of different accounts. It was a bank that had Silicon Valley people's money into it, specifically both individuals as well as companies. And I mean companies that were companies you probably have heard of, like Roku and I think Etsy, and like a lot of companies that ran their money through that bank, had a lot of their money at that bank. A lot of times not all of it, but some cases they had all of their money there. And one of the reasons they did is because the venture capitalists who had given them the money to start the business told them to use that bank. So it was all the eggs were in one basket. And they had way more than $250,000. And it was money they needed. It was money they're using for stuff to run their business on a day-to-day basis. So the venture capitalists, apparently there was like a group text of 200 venture capitalists who were all talking to each other and were like, oh yeah, we need to, have you heard about this bank and maybe we should pull our money out? And then they all started pulling it out. People were tweeting about it, and there was a run on the bank where everyone went there to try to get their money out first. Because there's this human nature thing of, if the bank isn't going to be able to cover everything, if the bank's going to go under because of interest rates, because of crypto going down, because of all these things, then I have to get my money out first so I don't get screwed. So I have my personal money so my businesses can still run. And so they started doing that. And here's the kicker, is that in an old-fashioned world, a run of the bank meant people would literally get in line. They'd run to the bank and get in line and get their money out. And once the bank closed at 5 o'clock, they could have this time period of maybe being calm, which may or may not work. And the FDIC could come in and the federal government could say things, and etc. That doesn't happen nowadays. Now we have online banking. So all night long, people were wiring out billions of dollars until the bank no longer had any and the wires couldn't go through. And then Friday morning, the next day, the FDIC had to come in and shut the bank down. Now, what ended up happening over that weekend is another bank failed too. Signature Bank, I think. Yeah, Signature Bank, which is a bank a lot of law firms have money in, and it's based out of New York. But because multiple banks were failing because of multiple runs in the bank where people were putting their money out and putting it in the big banks, the FDIC had to come and say, look, we're not going to just pay that $250,000. We're going to pay all of it. We're going to use not taxpayer money, but we're going to use money that's in this account. It's kind of like an insurance account that all the banks have to pay into to pay all this, make all those depositors whole. Not that people who own stock in the bank, they don't get anything, but the depositors, so more banks didn't fail. And this stuff is still going on right now. So why is that relevant to you? Now, if you have more, if you have more than $250,000, I recommend you have more than one bank. Now, I'm not saying you split every $250,000 into a different bank, but you at least have more than one. At least have more than one. And you may want to consider using something like Mercury where, and they're not the only one, but that's an example where they split it up among a bunch of banks. So that you get, I think they got it up to like $3 million or something, a very high amount of FDIC insurance you'll get because they spread out on a bunch of different banks. And also it's just spread out on different banks. But what if you don't have $250,000? I don't have $250,000 for my business bank account, but I did open up another bank account today or a couple days ago. The reason is the other problem. Even if, let's say you have $100,000, or you have $5,000, okay? And it for sure will be covered, you're not getting your money the exact same time. So your money's gonna be locked up for some period of time. It might be hours, but it might be days, maybe longer than that. And then meanwhile, how do you pay for stuff? How do things not bounce? How do you run payroll? And that's why you have another account. And I actually highly recommend this. Not just you have another bank account, but you have 2 merchant accounts, which I do have. I have multiple merchant accounts to accept credit cards. I recommend that you may want to also have a PayPal for your business. So that could be another backup for your business. You may have a credit card for your business at a completely different bank. It could be something like your Amex card, right? That's a different bank. And so the idea is by spreading out these things to different banks, you are spreading out your risk that if any one of them fails, you have a backup for each thing. I also recommend that you keep your merchant account where you accept credit cards and your payroll, where you're on payroll for your employees, in a separate thing than your bank. Because if you have problems with your bank, you don't want to have problems with everything. Because what happens is, let's say you have problems with your bank, but you can open up another bank account and maybe you already have another bank account. Now you can hook that up to your merchant account. You can hook that up to your payroll provider and things can still get run. But if everything's at one place, you got to set up a new merchant account, a new payroll provider, a new bank account, all these new things, and that will take you so much more time. So the short answer to this very long video is that I highly recommend that every business owner, once you get going, not on day one, okay? Not on day one, you don't have enough money yet. But once you get going, once you start having not just $100 to open up a bank account, but you have thousands, tens of thousands, etc. dollars, you have more than one bank account. You have more than one merchant account. You have more than one banking relationship. Once you have, if you have a credit card somewhere, if you have a savings account somewhere, a checking account somewhere, you have developed a banking relationship over a period of months or years, and they're going to be able to do business with you in other ways. It will give you a lot of leverage and give you a way to manage that risk. And if you have a business where you have more than $250,000, then I highly recommend you have some of that money in other banks. Again, this is attorney Elizabeth Potts Weinstein. If you have any questions about what we talked about today, feel free to post them in the comments below and I'll try to point you in the right direction. Thumbs up if you found this video helpful. Subscribe for more videos like this. And if you would like to connect on any of this stuff even further, you can join the Discord or the Patreon. Links are below. Thanks a lot for watching. Bye-bye.